Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, August 13th, 2008. Well, folks, it was another down day on Wall Street as we had anticipated, but the biggest call of them all is the bouncing commodities that we saw yesterday coming. And we can look back in yesterday's video and talk about the USO chart, which we analyzed yesterday, saying it could bounce as early as today, which we said yesterday. And in addition, we also talked about the gold chart, the GLD, and saying how oversold it was and the likelihood of a bounce. At least our indicators, our proprietary technical indicators, were showing a high probability of a bounce on the immediate horizon as early as today as well. Sure enough, gold, oil, you name it. All the commodities ran today. Steel stocks were up huge. Agri plays, ag stocks were up like potash and Monsanto and Mosaic. And across the board, oil stocks rallied as oil moved higher by $3 per barrel. All right, you had gold up about $17 today, and in turn with that, the market overall was under pressure. The Dow closed down about 110 points, the Nasdaq just down 2 points, and the S&P down about 4 points on the day. So we talked about 2 days ago in the video a need for the market to pull back and a high probability that it would based on the indicators we look at, which is about 7 indicators, some of them just regular technical, some of them proprietary calculations. And we saw a few days ago, 2 days ago to be precise, 5 indicators telling us a high probability of a near-term pullback. That's happened. Yesterday we saw a high probability coming in for a bounce in commodities. That happened today. And now we're going to have to look across the board and see what is showing for tomorrow. Because now we've had the pullback in the market, or at least part of the pullback. There may be a little more to go. We're going to have to kind of leave that up and look at the charts today to analyze that. And now we've seen the start of the bounce in commodities. All right. So where does this set us up in the next couple days? Because today was Whipsaw Wednesday, and it really was whipsaw. Small moves overall, but they were quick and violent, up and down, rallies in the ES futures, pullbacks in the ES futures, and so forth. We'll go over that. Let's get right into it. Number one, I want to show the chart of the ES, and this is why you see it's whipsaw, because here you're trading along pre-market. The market gets into that early morning session, and all of a sudden, you see a pretty hard downdraft, really till around midday, that 12 o'clock, 12 p.m. Eastern time frame. Now, what all of a sudden happens is the market starts to reverse back to the upside. You reverse back, you have a quick pullback, you reverse even higher, right into the 200 intraday moving average on the futures, and then you pull back sharply and only to rally up a little into the close. So overall, you saw continued pullback, which we had anticipated in the market. And now the key again comes when we look at the daily chart, because we've had a 2-day pullback. The financials have pulled back. Golds have begun to rally. The oil stocks and the oil commodity itself has begun to rally as we had thought. And the question will be, well, is there more upside in commodity prices here? Or do we come down? Does the market rally, or do we have more pullback? And for that, we're going to go to the daily chart. So let's start off on the future, the SPY chart, which mirrors the S&P. And you can see here how we talked in the last couple of videos about the massive move up and expectations of a pullback. We saw that today. At the lows, the SPY was just hovering above the 20 moving average on the daily chart, which is a good solid support area. Now, this is one thing I want to show, guys, because there's a key in this market that I can't even express how amazing and how important it is. All right, let me erase these other couple lines I drew, because this is what it's all going to come down to. See this line I drew in, folks? All right, this is looking at the lows of this chart. Now, there's a couple different calculations we've done, and this point, which happens to coordinate and match up directly to this line and up the 20 moving average, this is an unbelievably key line or price in this market. All right, and if this comes down, if the market comes down on the SPY and starts breaking this, watch out. Okay, this is for us the downside. This is everything in this line. Okay, you start breaking this line, and you could be talking about a move down to at least this line right here. And let me erase those other ones. All right, so you could see a move back through that 20 moving average, through this key line that we've developed here, which happens to coincide with the 20 moving average and the bottoms of these channels, this little bit of a channel. And you could, first support would be right in this area, second support would be right here, all right, and third support would be a double bottom at the lows in this market. Now, if we do break that line, there's a fair possibility, and we'll have to calculate it out, that we do see the lows. Now, that's the downside bias. We like to show all sides of the picture here, or all angles of the picture. And so at the same time, as long as we hold above this line, and remember, a break of this line is not a pierce, all right, it has to be followed with another day down. So if we closed right here a fraction below, and there's a fair possibility they can save it the next day. What we like to see is confirmation. Confirmation avoids the amateurs kind of from getting whipsawed out of it. All right, because oftentimes they'll close or break a low, as I've shown in multiple videos, break a low, and they take it out by a fraction of a tick, or a couple ticks on the futures, or a couple pennies on the SPY, and all the amateurs jump ship and dump all their shares to the pros and the market makers and the hedge funds and the institutions, only to have it race right back up. So that's why we like the confirmation angle of this. So in any case, keep watch of this line on the SPY. Going to be absolutely key in this market. Again, we'll concentrate on it every day after the bell. We'll look back at this line. Now, on the upside, as long as we continue to hold this, even if we start trading sideways to a little lower like this is a bullish formation, hovering right around the 50 moving average, and should be setting up for another blast off higher. Okay? And you can look at, if we do make a move higher, you can see where the next areas of resistance will be. Approximately in this area would be the next solid resistance area, anywhere between these two lines. This will be the big area right in here. Connect those two, and right in there would be where you expect another blast off to go if we're going to move higher here, as long as we do not break this low. After that, we'll get into the next area. I mean, I can briefly look at the next portions and look at some key resistance areas. Somewhere in that line would be a very heavy resistance point as well. So keep an eye on this, guys. This could be everything. This chart here with this line on the downside, it is so key this market holds it if we're going to move back higher. Alright? So going into the next day, you got to just look at that line. That's all there is to it, guys. You know, tomorrow we're going to follow that line. If we break lower, then we start to analyze the downside and see if it confirms the day after. As long as we continue trading sideways to lower like we've done the last couple days, that's fine as well. And even after a 2-day pullback like we've had, there's even a small possibility that we start racing higher, although the markets could use another day or two of pause in it before we do that. But it is options expiration week, alright? And that's the one thing you have to realize, is that options expiration week is notorious for whipping everyone out every which way and just taking their money because the institutions are trying to have those puts and calls expire worthless. Okay? Now let's look at the NASDAQ, because the NASDAQ's been amazing. Looking at the NASDAQ, look at the pullback, and look at the extension of the move on the NASDAQ. How amazing is that type of move off the lows? And the NASDAQ has that same basic chart pattern in it, alright? Although it's a lot stronger. And you can tell because the NASDAQ was down fractionally today, just 2 points, while the other indexes, the Dow was down about 100 and change. So you can see that the NASDAQ is remaining extremely strong. Now, the NASDAQ really could use a pullback at this point. What I'm seeing is this point here is going to become a necktie. Necktie is an extremely good support area where this 20 moving average meets the 50. Or even crosses the 50 to the upside. That's a bullish sign, but oftentimes you do need a little more of a pullback here after such an extension move. So there's a decent probability that even though the NASDAQ is showing a lot of strength, we may see a little bit of a downdraft coming in at some point to bring the NASDAQ back down just a little bit. If it were to go higher here after this 2-day pullback, which again, this is a bullish full formation on the chart, you would start to look at the next area right here. That would be the next push to this point right in here. And then after that, then we're talking about possibly going back to the highs of May, which would be somewhere in this range, So there's a lot of possibilities here on the NASDAQ to look at. But really what you want to just focus on is what type of chart pattern are you seeing develop over the next couple days. Right now, as long as these pullbacks remain small and in this decline sideways type action, that's a bullish sign for the markets, and we'll see. There's a small possibility you see the NASDAQ trade as low as here, as this 20 moving average creeps higher, and at the same time there's a decent shot that you're going to break up on the NASDAQ to this point. So right there, that's your ups and downs. You have upside chance of this much, downside chance of this much on the NASDAQ. So it's a little, the risk reward is not that great for a long trade. It's still a decent one for a little upside, but really the downside being a lot, you can see the size of the line there is a lot bigger to the downside, which would be your good support right around here on that chart. So keep that in mind as well. Now let's take a look at some of these other stocks that moved today, because the GLD was one thing we had highlighted yesterday. We talked about how this was a cliff dive and this was setting up for a bounce, and sure enough today, up a beautiful bounce continuing here, and actually a little bit of a tail formation there, which is a bullish sign, and we broke the high of that today, which is another positive sign on the gold. That's GLD is the symbol on that. And we had talked yesterday about the possibilities of a solid bounce coming in. The other one we had talked about was the support areas on the USO, which were right here. And we talked about this area of support on the USO, And one thing I do want to point out is we had talked about the possibility of whether or not this market would move down into the 200 moving average. And the one thing I would say is I saw everyone out there saying, I'm waiting for the USO to hit the 200 moving average, then I'm going to buy. And yesterday in the video, that was one thing on my mind when we talked about the possibility of a bounce coming off this upper line, is because when everyone's waiting for that, it's probably going to bounce before it gets there because there's just too many people. All the amateurs, all the regular folk out there, the institutions know that they're waiting there and they're not going to let it get there before they bounce. What they're going to do, they bounce it here and then the amateurs say, oh, I'm missing the trade. They jump long and then obviously it reverses back down. So there's a possibility of some more upside on these commodities in the near term, but ultimately we do see a down move coming again after a little bit of time. Anyways, that's covering that. We had a great move up in a lot of stocks today. A lot of the ag stocks, a lot of the commodity stocks like gold stocks and oil stocks, huge moves. Come join the chat room. Come join the Swing Trade Alerts, folks. We'll be back to analyze this market tomorrow. Talk to you soon.